All right, Nick, welcome to the podcast, my friend. You got a great journey. You've had an interesting background. You've built a very successful business in a short period of time. So let's just get right into it. What were you doing before you got into real estate?
So before I got into real estate, my father was a general contractor. So I was working under him just as a laborer, honestly, just passing the days away, hating my life pretty much. From there, I just knew it wasn't for me. I needed to get out of there. I started flipping cars a little bit, nothing too serious. I was kind of floating in my early 20s, doing whatever the hell I wanted, pretty much until I found the real estate and I found my real passion there.
There you go. So you were flipping cars, had the entrepreneurial bug. It's funny, I was actually working for my dad's friend. I was probably 20 years old and I was putting floors in ShopRites overnight with a bunch of guys who got out of the slammer. And then I would go to Deep Jersey by Newark for 20 bucks an hour, which was good money at the time. And I was
You
working with a bunch of ex-criminals and they were actually really nice guys. I got along with them pretty well, but I realized that's not what I wanted to do for my career. So I totally feel you there. So real estate investing, you got started in the business by actually doing what I recommend people do, which is get a job working for another investor, learn the game, and then go out on your own. So tell me about how you came upon that opportunity, how that helped you get to where you're at now.
So, as you mentioned before, I always had that entrepreneurial bug. So, before even flipping cars, I was flipping shoes. I always just loved to flip shit, turn anything into a profit. So, I found wholesale real estate, on YouTube, like everyone else back in 2021. And I was like, you know what? This is really interesting. It's the same thing as flipping shoes, flipping cars, but, it's an extra zero on it. So let me see if this is something that I can learn myself. So I started looking into wholesaling companies in the area, which is kind of hard to find. I'm just Googling like wholesale real estate companies. I ended up finding a company that wholesaled down in White Plains. It took me about 2 to 3 months just grinding. I was door knocking. I was cold calling, just really putting in that groundwork to really try and make a deal happen. I didn't get any deals while I was there, but what it did offer for me was that proof of concept to see like, hey, there's a bunch of guys doing these deals and making big bucks. So when I saw them actually making money off of this, I was like, all right, this is very possible. If they can do it, I can do it. And that's when I started my own business, about 3 months there, and then I jumped ship.
So you went right full blown entrepreneurship. And it's smart you did that because that was a hurdle I had. It's like I knew it worked and I saw other people making money. I wasn't making money at the time, but I knew that it could be done. And then the more times I would see people post pictures of checks or whatever, local investors making money, I was like, okay, eventually I'll get there because it does work. And that's where I see a lot of new investors get held up is like they think it worked, but not for them. But if they understand that anything worth it takes time, and if you can get around people like you did where they were doing business, even though you didn't make any money, that's all the belief you needed in order to justify that consistent action and that marketing money you have to put into to make it successful.
100%. And that was one thing that I always did for some reason. I would look at people that were successful or people that were famous, be like, wow, these people come from a different planet. Like that could never be me. But
Yeah,
then starting to realize, like, all right, these are just normal people that have put into work. Like, all I got to do is be consistent and just delay that short term gratification and keep going. And, just digging that into my head really helped me in the end.
totally, brother. Well, let's talk about your first check you got in the real estate business because that's like pivotal moment for any entrepreneur or especially real estate investor is I call it the shut up check. Everyone's telling you this doesn't work or whatever, you're crazy. And then you come back home with a check, whether it's 1,000 or 100,000, it's enough to get the critics to hush. So what was your first real estate deal?
So my first deal at this point, I think it was about 3 months into starting the company. It was a wholesale deal. I ended up making 40 grand on it.
Wow,
And
your first deal you made $40,000 on?
my first deal. And you know what? Working at that other company, I saw them making these big bucks. So when I made the 40 grand, I was like, all right, this is just normal. Like I didn't even think that this is crazy. But like you did say, speaking to everyone, family, friends, everyone's like, it kind of sounds like a scam. I don't know about it. I remember being in contract and had it for 72 and I sold it for like a buck 15. And I remember having the assignment contract, so I have that paper that's just as valuable as the 40 grand. And still everyone's like critic, like, I don't know if it's gonna work, like this and that. I'm like, just shut up. It's going to come through. And back in the day, I was the wild, wild west for me. I had my buddy, Gary Crawford, which, I always give him credit for getting me started with all my systems and everything else. He actually listed it on the market. We didn't tell the seller. I was just like, fuck it, just put it on the market.
Dude, that's fucking crazy. Your first deal making that much money. Jesus. What did you do with that money? Usually people make like 10 to 20 their first deal if they're lucky.
At this point, all I was focused on was really just building the business. It was probably a little bit of a mix of luck and hard work. I brought in a bunch of deals, I would say, my first 4 or 5 months in business. So, once I had that money, I bought another property and I just kept rolling the money into different projects at that point. As soon as I brought it in, it would go back out. I didn't go out and spend anything. I was just so like hyper focused and so like ecstatic that this was actually a thing that I was
Yeah.
like, going to build the momentum here.
Especially with a check like that on your first deal, because at the time your living expenses and your situation was different. You didn't have a lot of responsibility and pretty much probably cost you maybe 2,000 to acquire that, if anything, with texting and calling. So you got all that money that you can deploy back into your business. And, that really can give somebody a head start if they're smart with their money on their first deal. Because a lot of the times I see people, they're calling and texting and they're getting these deals cheap. And then they're making a margin like that. And then they have all that money to go redeploy back into their business, which is what you did. And you started picking up rentals and doing flips. And now you've built a great business, right? Now you're well established in the Hudson Valley. You got a contracting company, which we'll talk about. So, what would you say as of today is the current mix of your real estate business? And then we'll talk about the contracting business.
I would say over the years, I kind of went back and forth. So my first year, I was like, you know what? I could close all these properties too, because my attorney was also my hard money lender. He saw the prices that I was getting these houses for. So he was giving me 100% loan to purchase. So I had bought a few properties. I planned on flipping a couple, which, once again, ended up turning into rentals. The first year was a mix. I did one novation, which was awesome. Like 60 G's on the novation. I was like insane. And then, yeah, I think it was maybe 2 or 3 wholesales and then another few flips from there, something like that, a good mix. So that would be 2022 at that point. 2023, I had gone to pretty much fully wholesaling because I had become so stressed. Like I learned my first year, I was wasting so much of my time at these properties. I only had a couple guys working for me at that point. I'm showing up, I'm trying to paint, I'm trying to do all this stuff that I'm not even good at. So I'm like, you know what? I'm wasting too much time at these properties. It stresses me out. I hate construction in general. So I'm like, I need to get out of this. So I moved more of like, hey, I'm going to sit in wholesale for a bit and let's see what happens with this. So that was 2023. It was mainly wholesaling. And then I had one big flip. And now at this point, I don't like to wholesale anything because the way I look at it now, especially with the way the market is, it's hard to get deals, or it's harder at least than it was then. I want to juice every penny out of each
Yeah.
deal. That's why I started the construction company. That's why Sam, my fiance, is a realtor, to monetize that and try and just juice every penny out of the deal and not give it away to anyone else.
Yeah, don't give away the farm. I like to wholesale deals that are deals I don't want to buy myself for whatever reason. Like, let's say it's a hairy deal and you got to rebuild the whole thing and pull 7 different permits, and that's going to take 9 months, or it's in an area I'm not too familiar with. Like, for example, the one we're wholesaling together, it's kind of a two family, but it's not. And it's kind of sketchy. And then you could rehab it and sell it to a retail buyer, but then they have to live in one of the units and then rent it out. It's like, we got a cheap enough price to where like we could still make 30 grand assigning it. But I see some people like giving away deals. I mean, I bought a deal from a wholesaler, for example, and he made 60 on it and I made 135, and I put probably $30,000 max of construction into it. And I'm just like, wouldn't this guy just buy this house? I mean, he didn't live in the area, so I get it, but like he gave me this great deal and he made a really good assignment fee. And I still made 135 grand, like net after everything. And I'm like, man, wouldn't this guy just buy that? But hey, it is what it is. It's not my business. And I'll pay a wholesaler whatever they want, assuming the numbers works. I've found really good deals from wholesalers. Like wholesalers don't know the product they're selling.
I think that scares people too, because that was one thing that I was really happy about from the beginning. It didn't scare me to close on a house. And
Yeah.
like lending, I think people are like, how am I going to come up with the money? I don't know any contractors. Like it becomes very confusing where they're like, all right, if I can make a quick 60 grand, who's better than me? But to touch on your point too, I learned with those 2 big flips last year that like the hotels really, as we know, are the way to go. Like the full renovations, I don't think I would take one on, at least for the next like year or two. at this point.
They're cash killers.
There's too much that can go wrong. You're holding your money for too long. Like the deal has to be really, really crazy for it to make sense. But yeah, these deals that you could take and you could put lipstick on them, those are the cash cows.
That's where the real money is when you're basically arbitraging the wholesale price you got it at and that as is retail value, assuming it's financeable. You can have that big spread in the middle. That's where you make the mega, mega spreads because you're eliminating a lot of the risk that is the construction because, you and I renovate a decent amount of properties. It's like, yeah, you can rehab a house and have contracting crew, but like if the town comes in and shuts you down, like now you're backlogged. You got to get permits. Now the town's looking at your property and it's kind of on the radar. I tell people there's three businesses, right? There's the lead and marketing business, like lead and sales business. There's the getting the deal to the table business, whether you're assigning it or closing on it to buy it. And then you got the business of construction. So you got to be really good at three things if you're a rehabber and you're not buying just from wholesalers. And then you got to get those deals direct to seller, which usually have title issues to the finish line. And then you got to take that product that took you 3 months to buy because of the title issue, renovate it, which takes 2 months, and then resell it on the back end, which in New York takes 2 to 3 months. You're at a 9 month conversion cycle and you paid for that marketing a year ago. So you're spending money in January to maybe get paid in December. Even happens to me sometimes. Like you get in these cash jams because you got all this receivables that you think you're going to get. The buyer doesn't screw you, but you already have the money laid out for the purchase and the rehab and the marketing. That's when this business can get funky if you don't really have a good, operation.
I completely agree. And the 9 months is almost a good situation, depending on the
Yeah,
rehab.
yeah, depending on what you're doing. Yeah.
I learned that lesson quick, this past year, like I was saying, with these two big flips. If you don't have all your ducks in a row before you close, that was a major lesson that I learned because in my first year, the houses that I bought were super cheap. I got super lucky. I bought two houses, one was 85 and one was like 95. So it didn't really hurt to let them sit with the hard money. They were probably worth 150 as is or something. So I bought them super steep. It was really good because it let me get my training wheels on. Like if I was in a normal, like buying this at 75% or something like that, I would have gotten smoked on both of them. It would have been terrible. So going into these other projects, I didn't have that guideline really set up for myself where like before you close, you should have the next 2 months of construction planned out. You should already have all
Yeah.
of your ducks in a row as opposed to like, hey, all right, we closed today. Let's see what we got to do now. And that's what we did. With big rehabs with a lot of money on the line, it gets scary. For me at the time, it was one flip being 350K, which was bigger than these other flips that I had done at the time. And then another one being 550 and then buying them at the same time, which was the worst part about it. Where like, of course, it just so happens these two deals have been in the pipeline for say 4 months, 3 months at this point. They both close within like 2 weeks of each other.
That's to
Perfect.
purchase, not even to rehab.
Yes.
So you're looking at 800 something thousand just to get in the door plus two 6-figure plus rehabs plus holding costs. And you ended up doing well on those and ended up working out. So let's actually cover those deals because those are interesting case studies. And then I want to talk about how you vertically integrated to a construction company to help offset a lot of the organic bottlenecks that happen in this business. So let's talk about Rhinebeck and the one in Cold Spring, right? You bought Rhinebeck for 550, correct?
Correct.
That's a high-end area if people aren't familiar with that. That's like premium. People from the city go up there, $1 million houses. How much did you put into the construction on Rhinebeck?
So you're gonna yell at me for this because I don't have my numbers really dialed in, and I know that's a big no-no of not having your specifics. So the problem with this was that we started this construction company right alongside of closing these two properties. We started the company, so we're buying tools. We got insurance at the time. We had put guys on payroll. Like there was a lot of overhead. Like I think we paid close to 50 grand in payroll taxes alone. It was something ridiculous. And I was like, you know what? Everything's out of control right now. There's fires everywhere. At the end of the day, between the two deals, we made a little over 200 grand between the two combined. For the risk, not worth the reward. But it worked out in the end because there was a point in time that I was like, I'm going to lose my shirt on this deal because, with Cold Spring, we ended up being able to subdivide it, which we're still in the process. So fingers crossed, everything should go well. We have, I think, one more meeting with the town, but without that subdivision, that bought us an extra 225 grand, which is pretty much all of our profit. Like we would have been just break even, or I could have lost money depending on what happened with the sale of the property because it ended up selling for close to 100 grand over asking. So like looking at my numbers before anything closed, I was like, I could possibly lose like, 6 figures or something, possibly just looking worst case scenario. So it worked out in the end, which was good, but it was really scary times. And like, 2023, I just started to build this nest egg. Like I closed the two big ones. I made 120 grand on that one flip. And then I made another 120K on that assignment deal, that one in Wappingers. And, I got money now. Like, this is great. And then going into these projects, it really changed my whole mindset. Cause at that point, I started blowing money. Nothing mattered, 3 grand, 5 grand, 10 grand. It's like, oh, I got money. And then all of a sudden you're like putting a shit ton of money into construction of these properties. I have 6 figures of my own money into them. And now, I have nothing. I'm pretty much down to zero in my bank account. And I'm like, oh my God, I'm poor.
Your house rich and cash poor.
Exactly. So having that happen, like really changed my outlook on a lot of things. So I'm grateful for it. But yeah, it was a lot of major lessons through these projects. And I think my biggest problem was the lending. We were giving out crazy high interest loans, some at 20%. I have one at 22. So these loans were promissory notes, not attached to the property,
Unsecured, just IOUs basically.
pretty much an IOU note. So that was my thought process in the beginning because the other company that I used to work for, the same thing. They would offer super high rates of return
With no collateral.
with no collateral. So, what I ended up learning from there, my thought process, at least was, hey, let me get these guys in the door at a higher interest rate. Once they know that they can trust me, once they know that I'm not going to, I'm not going to fuck pretty much, I can start buying down my interest rates.
In
I said,
exchange for collateral too.
right. I have no problem with doing that as well. It just seemed like the way I saw it done at the previous company. So it was like, all right, I guess this is the way to do it. You just give them a promissory note. You're good once they sell.
I'm pretty familiar with the lending business. I mean, I've done an IOU to a friend for a couple 100 grand, got paid back in 3 weeks, couple points, like no big deal. Done a transactional funding thing. I'm doing the hard money now. That's hit or miss. But, you get like a hard money lender like Kiavi or somebody to do the first position. Even if you go raise for that junior loan, which is a second mortgage, which technically isn't even allowed on the property if Kiavi's funding it. Now that investor's in second position. So there is collateral assuming the first is taken care of. So I have a friend who used to have a business that was just doing, it was called gap funding. Like, you need money for the hard money down payment in the construction. They'll give you the money in second position for a higher interest rate. But
Right.
my buddy got over his skis in that business and ended up having to take back properties because the borrowers were not paying the first. They were jacking the rehabs up. Guy was coming in foreclosing from a second position, taking over the senior lien. And, you're having more risk for that as a lender. So if you could do the IOU, that's even better because I've done that too. I've borrowed like IOU money. And the thing that people don't realize, at least in New York and most states now, is like when you get a mortgage, especially a commercial mortgage, the fucking mortgage recording tax, at least in New York, is silly. I just did one the other day and I paid almost $2,000 just in mortgage recording tax. That doesn't count transfer tax. So if you
Yep.
get a thing with no mortgage, there's no closing costs. It's a straight note. They give you the money, you give them a note.
That's the way I looked at it too. I was cool with giving a higher interest rate to avoid things like that. Cause I think it's 1% of the loan is mortgage tax. There's all these other costs like we were talking about before too, but there's all these fees that they bang you with. So you might be looking at, a loan from Kiavi or one of these bigger companies that show a point and 11% or something like that. But at the end of the day, you're really paying, depending on how long you hold the note for, because it's so heavily front loaded with all these fees and whatnot. You might be paying closer to 17, 18%. You don't even realize it. They're doing appraisals as opposed to these private money guys are kind of buying it on your word. So after looking at that, I'm like, you know what? It's a lot simpler to just go to private money because I'm like, I don't need to fill out these applications. So that's why I was like, you know what? For the convenience and at the end of the day, it being more or less the same thing, I'd rather go private money. But once again, like use that higher interest rate in the beginning and then create these relationships with lenders that they know. Like I've lost money on deals that, I have one specific lender that I've done a lot of work with, the private money guy, and I lost money on deals and paid him. We have this agreement. I want to stick by my word. So I paid him out. And that works from the tail end because now when I reach back out to him,
He knows you're good for it. That's where I see people making mistakes. And that's why when I borrow private money, I only get private lenders involved when they're like no-brainer deals with multiple exits at deep discounts. Cause like worst case scenario, I'll pay the guy cash out of my own pocket. But like I do tighter deals, and I'll get hard money for those specifically. And then I'll put my money into it. because I'm not going to fuck a hard money lender over. But when I see that there's more risk, I, as a steward of capital, will put my own money at risk and then get the lender involved and have more skin in the game because I know that margin's tighter. And worst case scenario, I'm going to have to keep it as a rental and leave that equity in the deal. I don't mind that. I can live with that because I value these private lender relationships so much. And there's value there, right? Like being able to text somebody on your phone and getting $250,000 or more. And that's why you got to be good with that private money. I see a lot of people getting over their skis and they're over raising. They're buying deals at tight numbers with private lenders that have high interest rates and they're getting hosed. And I'm seeing a lot of guys doing apartment deals doing the same thing. They're raising money. The yield doesn't line up. Like the freaking interest rate on the apartment deal is 7%. They're paying their investors 10. Something goes wrong, you're fucked, right? As the investor. So I don't like to invest in like syndications or anything like that. I just don't think that's a great play right now with the way that rates are, unless you're going for depreciation. But I digress. Other thing you did, you started this construction company, which is smart because now when you're doing rehabs, you have that vertical integration. So what does this construction company look like now that it's here and it's full force?
So to start this construction company, and I guess a little background to it, a very close friend of mine, really just weird coincidence on meeting my partner. We had trained at the same jiu-jitsu gym together, and he ended up door knocking my house. He started working for sales for a company. We started talking, and he worked underneath a contractor for a while, was super smart, can pretty much do anything as far as a residential remodel, but didn't have that business backing. So when we spoke, that was my downfall, is that like, hey, I can get these houses. I have the wholesaling situation and sourcing of deals pretty down pat. But when it comes to renovating, like that stresses me out and it shouldn't stress me out. So we made this relationship and it's been great. So to start, we had these two big flips, which goes back to Cold Spring and Rhinebeck, which got our training wheels on. So luckily enough with both of these houses, buying them at steep discounts really saved us. We took them at my wholesale price and we were able to flip them. My partner was also learning. He's never done a flip before. So he's almost in the same boat as me. I have a little bit more knowledge on the flips than him. He has the construction knowledge, but he's also never really run a crew before. So now we're learning a lot of things at the same time. We learned a lot through these flips. So as much as we didn't profit as much as we would have wanted to, the amount of knowledge that we gained from doing the flips is immense. So now we finished the houses and we were like, hey, look, we need to get our contracting structured. Like we need to have an actual contracting company. We can't just have guys that know how to go work on a house every day. So now that's what we're building, is we're building the company, building the sales, building the whole back end, and now just starting to take on more jobs as opposed to just flipping. Because that
Yeah.
was another thing with these flips, is that I backed all the flips. I raised all the money and everything. And it was a lot of stress on me because it was more or less my ass on the line if everything went south.
Yeah. He was a silent guy basically in the background.
So that was one thing that we had discussed moving forward. We said, hey, look, let's get the contracting dialed in. Let's build up our bankroll and then we'll jump back to the flips. And if we didn't do these two massive ones at the same time, I wouldn't have as much of a problem, I think, hacking them. But I think this like scarred us so much, which it was great because once again, we learned so much from them. But we're like, you know what? We need to have the backing because we can't have no money coming into a revenue company for 6 months. It just doesn't work. We need a quicker cash conversion cycle. So we jumped into residential contracting. It's been great. Like it's been about 2 months now.
Have you found that the homeowners are a better client than investors just because they're more liberal on what they're willing to pay?
No. So me and my partner have been going back and forth with this. So homeowners are tough because they're paying to get a specific job. Some people are super chill. They don't care. Other people are, super meticulous. We would like to go not towards a flipper, I guess more of towards like a developer, I guess.
Developers have that built-in margin on their cost basis because they're going blank slate construction versus a flipper has a budget and the budget is the budget, right? It's like if it's 60 grand, it's 60 grand. You know it's going to cost more to renovate because you're literally fucking doing everything. If it goes over, it goes over, but like then you're fucked, your profit's gone. So yeah,
Right.
flippers are probably the worst customers because their budget is so tight for the most part, unless they're getting crazy deals. I think it depends on the customer.
Like you said, I think it's finding the right clientele and doing a little bit of everything and seeing where we feel comfortable and what makes us the most amount of money with the least amount of stress.
Totally. Well, what would you say, like, if a GC, if his total job cost is 100 grand, cost of goods is 100 with labor and materials, is a GC marking that up 10, 20, 30? What's the margin on that? like the pure margin for the business.
So you're saying strictly labor?
Like, let's say I'm doing a house and it costs in labor and materials $100,000. What would a good contractor put as a margin between that and what they're charging the customer?
So anyone listening to this, contractors, don't beat me up for this. I'm pretty sure I want to say it's around 30%.
Contracting is a good business. That's what I'm trying to say. That's a nice, juicy service-based business.
I also don't want to speak out of my ass because we're still new, but we're like, let's do this right. Let's put the guys on payroll. And then, right, you start paying, your payroll taxes and you start paying all these fees. And you're like, wow, it's not really easy to make money like this. Like every week, if we're spending like 5 grand in payroll, but it's funny because it's all this stuff that you kind of like you get thrown into the fire and then you realize, like, all right, this is why people don't put people on the books. Like, your 1099 your guys, you have to do cash. Like you have to get around it somehow.
As we start to wrap the show up, Nick, you're a great guest. Love talking with you. We talk every day. We do deals together. Our little community we have is phenomenal. We got our little group chat here. It's like no
Mhm.
seller is safe in our group chat because if they're shopping it around, the odds are it's coming to one of the five of us. So it's always fun to do that. Listen, any final words of wisdom for anyone here, whether they're getting started or they're trying to grow their business? If you had to boil your journey down so far in a few sentences, what would you say?
The only way to get your training wheels on and start going is really to start cold calling, maybe send out mailers. Like you got to have a little bit of money behind you to start marketing and then just be consistent. And then don't stop until you have a deal. If it takes you 6 months, it takes you 6 months. So it's like, don't think that you're going to fall for the next 2 weeks and you're going to get a deal because that's when it's easy. Like when you're fresh into this, you're like, oh, I'm so excited. I'm in real estate now. I'm an investor. I'm calling. And like, the first few weeks, you're fired up. And then you don't even get a hot lead in 3 weeks. And you're like, all right, maybe this just doesn't work for me. It's going to come sooner or later. There's deals out there. There's always going to be deals one way or another. There's always going to be people in distress that need to sell for a discount. So yeah, if you want to get into it, just be consistent and keep going until you get that deal.
Lovely advice, my friend. Lovely advice. I love it. People want to follow you. What's the best way for them to check you out and any of your companies out?
So Instagram, Nick_Martucci. I said this last time too. I need to get my Instagram game up, but give me a follow there. NB Developers is also the contracting page that'll be attached to my Instagram page.
And then if they want to sell their house, not to Greg and to Nick, they would go to HudsonValleyCashBuyers.com, right?
Yes, sir. Hudson Valley.
I appreciate you coming on as a show. HudsonValleyCashBuyers.com, NV Developers on Instagram, Nick_Martucci on Instagram. Give this guy a follow. He knows what he's talking about. He's a great dude. And hope everyone enjoyed this interview. Take care, everybody.